welcome to Financial Mindfulness, an exclusive webinar at ICICIdirect. Joining us today is Vinod Philippe, Head Bancassurance of ICICI Lombard General Insurance. Thank you very much, Vinod, for joining us today. I want you to talk to our viewers about health insurance in particular. And just to start that conversation and to put some context into that, we're currently going through a world pandemic, which of course has put a lot more focus on health insurance than ever before. And I think most people would agree with me that health insurance is an important pillar of any sort of financial plan. In fact, an incomplete financial plan is one where there isn't sufficient coverage on health insurance. Would you agree?
Yeah, hi Samina. Thanks for the opportunity. It's great addressing the team. See, many people, it's a very cliche to say insurance should be part of the financial planning. But health insurance to an extent is very, very unique in the sense, you look around any hospitalization expenses today, right? The annual increase, the rate of inflation in hospitalization expense is going in double or more than double digits, right? The reason is most of these things, the cost of treatment is going up. Right. The quality of treatment is going up. The technology in treatment is going up. All of this is adding up huge amount of cost to the end treatment of a disease or a hospitalization. And what this is also doing is hospitalization, unlike any other financial products, is not a one-time event, right? Okay, you get hospitalized and you can rest assured for the rest of your life. You can't rest assured saying you will not get admitted again. Now, hospitalization is a recurring expenses in your life. The sad part of the story is why it affects financially is once you are into the hospital, the chances of recurring hospitalization as you go old is very, very high. Right. And that impacts your savings to a large extent. Right. And that is why of all the investment products or protection products, health insurance is going to be the most important aspect as one age. Many a time you find friends, colleagues reaching out to you when it is already too late. Right. So that balance is one of the most important tools as far as financial planning is concerned.
Indeed, Vinod. Also, another very popular sort of sentiment that a lot of people would resonate with is in the corporate world, most employees are given a corporate insurance policy. Is that sufficient, you'd imagine, or one should have a separate insurance policy over and above the corporate policy that's been provided to a salaried employee by his employer?
Two ways to look at this, okay? One, how long are you going to stay employed with that corporate, right? Because as long as you are staying employed with that particular corporate, you are to an extent protected by the corporate, right? Second, if you look at from a long-term point of view, what happens after your employment with the corporate? All of us will get retired at some point in time.
Right.
Your corporate cover also ceases with your termination of your employment. And then suddenly when you come into the market, either you're too old or your body is already sick, that you will not find enough insurance coverage for yourself and your family, right? That's one part of the story. The second part of the story is it's a cost item to the company. Right. Most of the companies today provide a 2 lakh or a 3 lakh hospitalization cover for your families. In today's age and time, 2 lakh and 3 lakhs is hardly enough. And we have enough and more cases where many employees come back and then say, I've exhausted my 2 lakhs and 3 lakhs limits. Then what do I do? Right? Hence, it's very important to always have, not only as a backup, but also as a protection of your savings to ensure a parallel cover along with a corporate cover. Putting all the eggs in one basket is not right.
Yeah. Right. So, that's, of course, got to do with salaried employees. What about self-employed individuals? So consultants, business owners, entrepreneurs. Most of us and I'm counting myself an us because that's pretty much the genre of the corporate world that I belong to. We all have a contingency fund, which is really one of your short-term financial goals any which ways. So if you do have a contingency fund or an emergency fund, that money could of course be used to fund your medical bills, I'd imagine. Would you still need a health cover even if you have an emergency fund set up?
The contingency fund, okay, you typically create if it is going to be a one-time event. Right? If it is going to be a recurring event, okay, how much of a contingency fund you have, it still not be enough, because you don't know what is the sickness or what is the reason for our hospitalization when you're finally inflicted with.
Right.
Like, for instance, I'll give you a classic example. Suppose, God forbid, somebody has a heart attack. Right? Now you will dip into a hospitalization expense, and then you will take care of maybe your 3 lakhs, 4 lakhs surgery and then move on. Right? And then there is a repeat hospitalization, maybe 3 years down the line, 4 years down the line. Okay. Now what happens? Again, you will create one more contingency fund. Right? And then there is a third or fourth sickness of another family member.
Yeah.
Right? So I'm a firm believer, what is the cost of creating a contingency fund vis-a-vis the opportunity cost of investing in a health insurance? Right? Now, for us specifically to say you're one of the self-employed segments, right? An entrepreneur or whoever, when you write even a 5,000 rupees check to a hospital, it pinches you. Right? It's a question of transferring that risk for a paltry premium. By paying, say, a 10,000 rupees or 15,000 rupees, okay, am I saving, or the return which am I getting by paying that 15,000, is it going to be high or low?
Right.
At the end of the day, what are you saving? You're saving some 15,000 bucks. In today's age, 15,000 rupees for a family is nothing. Okay, but what are you creating as a corpus? You're wanting to create a corpus of 6 lakhs, 7 lakhs, 8 lakhs, 10 lakhs. Now, why? There is an insurance company who's an expert in the subject matter. Stay safe. Let that risk be borne by somebody else. Right? So that's my advice to all the self-employed target segment.
And I think, the government also resonates with that, right? There's obviously a strong push towards encouraging individuals to invest in health insurance. And it is March, it's that time of the year when I cannot help but ask you, are there any tax saving benefits if you go out there and invest in health insurance? So, or rather on your health insurance premium, are there any tax saving benefits here?
Tax saving is definitely a huge inducement to buy. I don't deny that. But I have a larger point to make. Health insurance is one of anybody's largest investment return that you will ever fetch. I'll give you a very simple mathematics. In your early question, I touched upon what is going to be your average premium, right? 15,000 rupees.
Yeah.
Suppose a guy comes in and joins a health insurance, a young guy, 35-year-old. Let's assume he paid 15,000 rupees and bought an insurance, right? For next 10 years, assuming that the inflation of the premium and et cetera, goes up, assuming that in the next 10 years, he pays an average premium of, say, 20,000 rupees for next 10 years.
Right.
Now, 35-year-old guy has become, say, 45 in the 10 years. Now, what is the chances of a hospitalization happening in that family in a 10 years time frame?
Much higher.
Right? In 10 years time frame. How much would you have paid in 10 years premium? 2 lakhs?
Yeah.
In 10 years time pay, one visit to the hospital and come back, how much of money he or she would have saved? And the number of hospitalization goes up to, let's assume, 2.
Yeah.
You have paid only 2 lakhs for 10 years. But what you would have saved is a 4 lakhs or a 5 lakhs.
Yeah.
That's point number 1. Point number 2. Many instances when a customer has got hospitalized for some reason or the other, it's equivalent to a non-performing asset. Our bodies, once it becomes sick, they are technically like a non-performing asset. You will not get insurance cover in the market at all.
That sounds very depressing, Vinod. But okay, I guess I get your point there.
Right? It's crude, but that's a fact of the matter.
Yeah,
Now
yeah.
let's extend this argument to the same guy, 35-year-old, stays invested for 20 years. You would have paid 4 lakhs or maybe 5 lakhs.
Yeah.
Chances of hospitalization in his family in a span of 20 years. 3 times, 4 times.
Yeah.
And every time he gets hospitalized, today you go to the best of the best hospitals, you don't get out without a 2 lakhs bill.
You're right.
You look at COVID. In a COVID kind of a scenario, one member of the family infects the rest of the family members. It's a cohabitation of that disease. So 2 lakhs per member. Okay, and that is 8 lakhs. Then what do you do? So by just paying, say, 2 lakhs over a period of, say, 10 years or a 20-year time frame, what you get in return is almost 2x, 3x of what you would have actually paid. And similarly, you compound till the age. Today, who is the biggest buyer or who is seeking insurance are those guys who have already grown old. You and I today are looking for parental cover. Why? When those parents, our parents were young, they didn't buy. Now the question is, you and I are today young. When we become 60 or 70, do you want your children to hunt for parental cover? That's the question.
Right, Vinod, I think that's a very valid point you made, right? And especially the pandemic has showed us a very harsh reality that life is truly very unpredictable. It's not about being 70 and getting sick. We have 25-year-olds that are now falling ill. Of course, before the pandemic, if you told a 25-year-old you need to get health insurance, they'd probably disagree with you. If you told a 45-year-old you need to get health insurance, the conversation would be very different. But let's just, for the sake of our viewers and hoping that people understand this better, tell us what in your mind is the right age to buy health insurance. I know the earlier the better, right?
I don't think there's nothing called the right age. Okay. But there's always a wrong age. Okay. The wrong age is anything above 45 is the wrong age to buy. Because the problem is in a 45, you would want a high cover, meaning you are looking for a 25 lakh cover or 50 lakh cover, but your body is not good enough for the insurance company to take that risk upon them, right? So earlier the better is a cliche, but anytime today, even today when our data, ICICI Lombard specifically data, a large part of the data, you'll be very, very surprised, are less than 45-year-olds. Okay, and those, because of lifestyle diseases, lack of exercise, lack of fitness, whatever you might want to call it, right? The incidences of the less than 45-year-olds getting hospitalized is very, very high. Point number one. The average claim of a customer who is less than 45 is far higher than a customer who is above 45.
I'm going for a run right now.
Yeah, you should. You should. Right? So, even today, some of the younger guys have started, telling us about diabetes, hypertension, right? And when it starts hitting you at a very, very young age, you will never get a cover in the market. You will still be dependent on some government schemes for you to wrestle around and give you a protection cover, right? So you don't know. So don't wait for the moment to happen and then look for a cover. By the time it's just too late.
It's too late. Yeah.
It's too late.
Start today. I mean, that's the advice we can give you. If you don't already have it, please go out there and buy health insurance. Doesn't matter how old you are. You got to get onto the track pretty quickly. Vinod, of course, we live in a country where it's about families, right? It's about your children. It's about your parents. It's almost hum saath saath and everything. So help me understand this. Individual health insurance versus group health insurance. How do those two compare with each other?
Okay. I think the question need to be slightly reframed in sense a retail versus a group cover, right? So retail is a one size fits for all available to all customers of an insurance company. It does not distinguish between channel. It does not distinguish between a particular customer segment, etc., etc. Yeah, there are segments which a retail product caters to. right? The big difference in a group is customization, right?
Uh,
Now that customization is very, very unique, okay? Because you try to understand a cohort of customers and tailor make a cover for that cohort of customers. What it does is you are riding on a channel's knowledge and understanding of a customer. Hence, that information is going to be very, very supreme when you're constructing a product and delivering it to the channel partner. The case in point is say ICICIdirect. We know the premium quality customers of ICICIdirect, right? We know the age segments. They have been dealing with ICICIdirect for years together, right? So the knowledge about the customer is so high, right? Hence, I am able to construct a product which is very, very comprehensive, which is very competitive, and is very convenient to buy, right? That I'm able to construct all the three. You will find some of these features would be completely at a variance to what you might be offered on the retail. So, right? So in case a customer, depending again about which channel partner is offering, I would always recommend that today in the marketplace, you should look for a group offering cover, because if you are tied to a particular channel partner, you will generally find the offer that you get from the channel partner is going to be very, very supreme, because the channel partner assumes the role of a customer and negotiates hard with the insurance company and say, hey, this is what my customers want. Right? So from entire cohort of customers, I'm cherry picking a set of customers and say, these are my set of customers. This is the ask of my customers. Hence, I'm able to tailor make a product and give it to the set of customers, which will be very difficult in a retail scenario because I'll get everybody there.
Right. Right. So we know while it is a lot more superior, it's tailor-made. Are there any more unique sort of features of a group health insurance plan that you'd like to tell our audience?
Yeah. So there are one which is already on with ICICI Securities. One of the key features, like for instance, the waiting period. So in a health insurance, it's not that you will get a coverage from day one. There are certain illnesses which will get covered. Most of the retail products in the market has a 24 months waiting period. The classic example, hernia, sinusitis. Okay, those kind of very common ailments. Those get covered only after 24 months. Right? In a group construct, we have said for ICICI Securities customers, this will not be 24 months, but this will be only 12 months.
Okay.
Right? So by entering into this segment, you are able to give that benefit to the set of customers of ICICI Securities. That's a big ask. Then what happens? You just wait for 1 year. Thereafter, the entire book is open for you. Right? So that is one. Second, there are certain relaxations in terms of service levels. There are certain relaxations in terms of onboarding a certain customer. So the deep analysis which I might do of a retail customer, I may not do it with a group customer. Right. That's the second distinction. The third distinction obviously is the pricing part. Right? You will find the pricing to be far, far competitive than the retail offering, because I've tailor-made the product to suit the requirements of a particular segment of ICICI. So you'll find convenience, comprehensiveness of the product, and the competitiveness of the product. So ICICI Securities is a complete online platform. It's entirely. So I have my customer need not fill any proposal forms, no physical forms. He can log into a section, buy the form, get the instant policy, and move on. So a lot more convenient as well. Vinod, so while I want to talk a little bit more about group health plans, can we also buy it for our parents, or is it just restricted to individuals? Okay, so you can buy it for parents. Obviously, it comes with, what is the level of their health? Okay, where are they placed as far as health is concerned? So today, you have a product segment. There are two set of product segments which are there for, especially what we call as senior citizens. Okay, a customer who's got a very clean health, he can get a normal health insurance, right? Any hospitalization cover, etc. A customer who does not have a great health, meaning he's already suffering from certain diabetes or hypertension, etc., or what we call in insurance parlance is pre-existing disease, right? For those customers also, we have a wellness product, right? We may not be able to cover his entire hospitalization expense, but we have put together a product which at least will try to help him prevent a hospitalization, right? For instance, most of these customers, when you find, they do an annual health checkup, right? And they don't do it to a full extent, right? Because of costing, etc., you compromise on certain tests. Oh, said, no, I will do only this much test.
Right.
By buying this product, he doesn't need to worry. I will take care of 360-degree of all his tests, right? Then I have a doctor on call. At any point in time, he can reach out to my doctor. I have an emergency support system available for such customers. And in the event something happens, okay, I even give him a hospital daily cash, okay, right from day one for the number of days he or she gets hospital. So for instance, I have a limit of 4,000 rupees a day, 5,000 rupees a day, depending upon the construct of the product. I pay him for the number of days up to a maximum of 30 days in a year. So that product construct what we call as a zero cost to the customer, right? So all of these customers who have an illness or sick in the body, all of these customers today incur these expenses any which ways.
Right.
And you add a tax saving element to this, net, the customer doesn't pay anything from his pocket.
Right. That's clearly.
So we have created that product suite also for a customer who is not on his pink of his head.
So lots of frills that, of course, would make it very, superior as compared to individual health plans. Vinod, we're running out of time, but very quickly on the group health plan, is it a lifetime renewability? What is the rules and regulations in place right now with renewability? Okay, the rules are exactly the same as what you have on the retail side, right? The only difference is the customer who's got attached to a group, he has to stay invested in that group, or he needs to continue to have that relationship for lifelong. Oh, wow. Okay. Right? As long as that relationship, for instance, if a customer has come through as a group customer through ICICI Securities, as long as he's part of the ICICI family, ICICI Securities family, he will continue to get a lifelong rating. Okay. So he has to be part of that. But there are relaxations where he can switch. For instance, tomorrow he moves out of the group. He can choose any of our retail product that is still in the offering. But my sense is, even then a customer today will get a lifelong renewal. But the moot point is he needs to get himself insured for health insurance. Right. Thereafter, lifelong renewability takes care of. Right. So individual or group, this is a compulsion. You have to understand as viewers, young and old, that health insurance is a very important pillar of a sound financial plan. Well, hopefully we've answered a lot of the queries that the audience could have potentially had. But out of time now, Vinod, thanks a ton for joining us. Have a great evening. Thank you. Thanks a lot. Thank you so much.